Welcome to another webinar here at Route Consultant. If you have never met me before, or if you've never been here before, my name is Josh Gregory. I am the Vice President of Education here at Route Consultant. So all that means is I work with both buyers getting into the space for the first time to help educate them on the various industries and complexities of the logistics space. And then I work with current contractors to help find efficiencies in their business and add some profitability too. So across the board, internal and external. Now, for all of our regular attendees, welcome back. And whether this is your first webinar or you've been to these every time for the past few years, we still want this to be a place where everyone can come and learn and find something new and have any questions that they have get answered. But before we get to all of that, I do have the disclaimer to read as I do every week. So Route Consultant is not endorsed by and is not recommended by Federal Express Corporation, FedEx Ground, or Amazon. Route Consultant is not sponsored by, is not approved by, is not associated with, and has no connection whatsoever with Federal Express Corporation, FedEx Ground, or Amazon. So for everyone, just as a reminder of the flow of the webinar, the way this is going to work, I'm going to go through some content at the beginning. And then at the end, we're going to go into a pure open Q&A. So whether it's something I have to talk about today or any questions you have about the space as a whole, I'm going to be here to answer any questions that are out there. Just importantly, make sure you put those questions in the Q&A at the bottom. If you put it in the chat button at the bottom, I'll miss it. So make sure any questions go in the Q&A button at the bottom of the window, and we'll get to those at the end. But you can go ahead and type them in at any time while I'm talking, and I'll get to them later. So for today, I know many of you are still looking to get into one of these businesses in the logistics space for the first time. And we've talked before a little bit about what the closing processes will look like and how the timeline can vary and adjust based on the time of year that you're closing. So we have a couple of webinars on that. But what I wanted to focus on today is helping you understand all the costs that you'll run into when you close on a business, and then giving some tips and strategies for how to handle that process efficiently. So the first thing to think about comes back to something we talk about all the time, which is just doing your due diligence and doing it from the beginning so that you're aware of all of the good things about the business and also the challenges particular to the business that you're purchasing. And it's really important at the front end to understand what the typical ranges are for every line item on a P&L so that you'll notice if there's something that's too high or it's too low. Now, if you don't know what those ranges look like, if you've never seen them before, we can give you an overview of all of those if you just reach out to our team. So if you have any questions, reach out afterwards. We'll send that over to you. Now, those areas of operational inefficiencies are going to be the ones that you'll need to work through and deal with as you take over the business. So, for example, if your payroll is up at 60% of revenue in a FedEx P&D business, then you know that you're walking into a bloated staff. That's really high outside of what we would expect from a payroll perspective. And of course, that's going to affect your margins. Obviously, you're making less money at a time like that. But it could also mean that you've got too many drivers so that they're all used to running the really short and easy days because you've got too many drivers. So changing that culture is going to take time and energy. And it's not just an immediate fix that you can make, but it's something you need to be aware of because it is going to impact what those first few months look like as you take over the business. Now, another key area that's important to properly evaluate is the fleet. And the number one thing that our clients say after a close is that they wish they had spent more time evaluating and inspecting the fleet. And it is absolutely critical for you to make sure that the business price is taking an appropriately conservative estimation of the maintenance expenses. And you need to make sure that you have every single vehicle inspected by a mechanic before you close on the business. And actually, I would encourage you to have your fleet inspection scheduled at least 6 weeks before closing to give you enough time for all the repairs and inspections to happen before close. If you have had any kind of vehicle maintenance recently on a personal vehicles, you know that it takes a while to even get the appointment, much less actually get those vehicles repaired. So 6 weeks is a nice kind of average length before close to make sure that you get those scheduled so that they actually happen before the closing. And as far as the trucks, make sure you start with the ones that are oldest. They're the ones that are the most likely to have repairs that are going to take a longer amount of time, and then come back to the newer ones at the end. Now, there will be some businesses with trucks that need to be replaced immediately. There may be some that only have a year of life left. So it's really important to have that information so that you can properly plan your capital strategy. And it's not just your capital strategy today, but this lasts for a few years and helps you think through the cash flow. And immediate replacements are going to require you to have funds prepared at closing, or you're going to risk running vehicles that are not reliable and putting them out on the road just because you don't have any other choice. So that can really impact what you may need really early in the business. Now, the operational inefficiencies and things like an older fleet, they're going to make a business cheaper. It will affect the price. It will make the business cheaper. But cheaper can often mean that there are very expensive changes and improvements that you'll have to make, which is often very challenging to do as a first-time buyer when you're still trying to understand the space. And so that's why we always say that it's better to buy a good business for a fair price than a fair business for a good price. So just make sure that you're taking that into account as a part of due diligence, that you know what the business looks like, what the challenges are, that you're aware of the things that you'll have to tweak and potentially pay for once you take over. Now, the other part of this is that I want to think through the costs to be aware of that are going to happen at closing. So this is one of the big ones. You will be paying sales tax on the purchase. So that's typically about 6% on average, but it's going to vary state to state. And you will be taxed based on the purchase price that is listed in the bill of sale. So when you're thinking about and trying to do those calculations, it is going to come back to what the actual price listed is in that bill of sale. You're also going to be paying for vehicle registration, which is a function of the vehicle valuation listed on the bill of sale. It's one of the things I hear all the time from buyers that are looking at the value of the fleet and worried about if it's too high or too low. There's lots of things to think about when it comes to the value of the fleet. The higher it is, the more you're going to be paying in that vehicle registration sales tax. But it also means that that's more money that you're going to have to depreciate, because the depreciation that you have available is set by what the value of those vehicles are in that bill of sale. So there's a lot of different tax implications to take into account. And if you have questions on that, make sure you have some kind of CPA through this process so that you can talk through the best, the pros and cons of the different decisions there. Now, there are ways to be exempt from paying sales tax on that registration. There's something called the rolling stock tax exemption. Now, FedEx contractors are eligible for it, but you will need to work a little bit with the Department of Revenue in your state, and every state's going to operate a little bit differently there. So the best advice I can give is just to go to the Department of Revenue website for your state and try to see if there's a process listed there. It is easier to apply for this in certain states like Ohio and Illinois. Those are the ones that we typically use. So I can help with those states, but for all the others, there's a process you'll have to figure out. And there's a world where you can apply in other states outside of the state you're currently in, but you do have to have a physical address there, not just a PO box. And so in those states, you will have to kind of work around it. If you want to use those other states, you'll have to have a physical address. There's things to think about there, but it's worth it because you will save thousands of dollars if you can get this tax exemption. But there is just that annoying process that you're going to have to figure out on the front end, depending on the state you're in. Now, another cost to be aware of at closing is if you are using a bank to finance, because those banks will typically have fees that they charge when originating your loan. So as an average for the SBA, it's typically about 2% to 5% of the purchase price. For conventional loans, it's typically 0.5% to 1%, but those are significant amounts when we're talking about these multi-million-dollar businesses. Now, the good news is that the banks will be happy to roll your fees into the loan amount. Then you can pay those interest rates on all of it. But that is also another reason that seller financing is so attractive. There are no fees tacked on top of the financing amount if you're using the seller as your bank. Now, I will say that there are some banking partners that we can recommend to you that are very familiar with the FedEx space that we've seen do a ton of deals. We've seen it in a bunch of different logistics spaces, and they can make the process much smoother. We actually just did a webinar with one a couple of weeks ago. So if you're looking for banking options and you need partners, you need recommendations, we'd be happy to help there. So just as a rule of thumb, we generally recommend having about $75,000 or 6 months of debt service, whichever one of those two is higher, available as working capital at closing. FedEx pays weekly, so you won't be waiting a long time for that first paycheck, but that is an amount that gives you a comfortable buffer for everything that could happen in your first few months. After that, you can start to build your own war chest for yourself to protect you in the future. Now, beyond those costs I mentioned, there's a couple of other things that I want you to think through, because there are a few vendors that are costs that everyone has to pay, but these should be things that you negotiate and you're prepared for to take on at closing. Now, the first one is insurance. Everything from workers' comp insurance to a variety of different liability insurances and a few other products are things that you need to consider around insurance. And typically, companies like Amazon and FedEx will not let you begin your operations until you can prove that your insurance is bound and effective and meets their standards. So it's really important to speak with an insurance broker early in the process so that you're not scrambling to get this set up the week of closing. There are looser requirements in an industry like bread routes that's not Amazon or FedEx, but regardless, you still want to make sure that your drivers have the proper insurance before they're ever on the road so that you're protecting both them and the liability of your overall business. Another one you want to make sure you have is a fuel card, one that you plan to use and is ready on day one. Now, there are a variety of options here. The one we would recommend is the RCPA fuel card. It has discounts at the pump. It has controls and reporting to know where and how your drivers are purchasing fuel. And the card is usable at any gas station that takes MasterCard or Visa, which is just about everywhere now. But whatever vendor you use, you need to have something. Because if you come in on day one without a fuel card, it is a nightmare if you don't give your drivers any way for them to fill up their vehicles. It's also a way that you will save a good chunk of money, just getting those discounts and preventing theft by making sure you know where your drivers are spending and that they aren't stealing from you and that there's controls to prevent it. So just in general, a fuel card is a recommendation that you've got on day one. You also want to make sure that any technology you're using has been transferred into your name and that the contracts are ready to go when you take over. So that's things like your VEDR cameras, VEDR cameras. These are those two-way cameras where there's one facing out on the road, like a dash cam, and then one facing in at your driver. And those should be in all your vehicles. And FedEx requires it. Amazon does as well. There are spaces that don't require it, like bread doesn't require it, but it's a general rule of thumb where it is important to have those there. It is how you will find out what your habits are of your drivers, but it also gives you context when an accident happens, which can be really helpful if you're trying to argue your case as to why it wasn't your fault. You'll also need to make sure that your scanners, which are the things that you need to be able to run your route every day, are properly transferred into your name. Any technology you use for safety or route efficiency, those should all be focused on from the beginning as well. Because if those vendors have not been notified that you're taking over the contract and the business, then it becomes a whole cluster of issues when something breaks. Because then you need to call them for a repair and they don't know who you are. So try to get any vendor set up beforehand so that in those first few months of operation, when you're trying to figure out the business, that is just one less headache that you can already have resolved and not have to deal with once you take over. Now, the last thing to be thinking about around these closing costs are the ones that you may experience if you take over a business during peak season or in the months leading up to peak season. So there are a variety of additional costs that you will incur to prepare your business for the increased volume that comes during the holidays. So if you think about it, higher volume means that you're also going to need more trucks to deliver all that volume, but you're only going to need those trucks for a temporary period of time. It's typically about the week before Black Friday. Black Friday really doesn't exist anymore. I feel like every company now has Black Friday deals for a week before and a week after. So you start hitting that volume earlier than just Black Friday, and you need to be ready for it. And so you need more trucks, but not all the way into January. By the time January comes around, you typically are wanting to scale back to normal volume. So what most people do if they don't already have a bunch of spares in their fleet is that they rent vehicles. And so you may be using rental vehicles for peak, which are always more expensive than just having the vehicles, but it makes sense to do it since it's such a short period of time. You also might need to rent scanners for those additional routes that you are using that you have trucks out on. And the biggest costs come around payroll, where you'll have to pay those additional drivers that you have that you're bringing in just for a short period of time to handle that volume. And what you'll have to pay is going to depend on, how competitive those markets are and what the area looks like and how desperate you may be to bring in those drivers, depending on what the volume looks like. Now, FedEx does provide additional payments to you as a contractor in the weeks leading up to peak season to help offset some of those costs. But it's still important to be aware that if you're standing up on a business in September, October, November, there's going to be some increased cost burdens that you'll be bearing to prepare for that busy time of year. So that's a lot to think about. I went over a lot, and it can feel like there's a lot of moving pieces here, especially as you're almost to closing. All you're thinking about is closing, and there's all these little things that you're trying to bundle up and resolve as you head into taking over the business. Now, if you're buying a business through us, or if you're working with us as a consulting client, we're going to help you stay on top of all of that at every step of the journey. And if you have questions on any of what I talked about today, we're going to have the open Q&A in a second. So we're going to be there. If there's any questions I can answer, I will. But in case I don't get to all of it, or if it's something you think of later, you can always reach out to our team after the webinar at any point in time, and we will help you any way we can as you're going through these process. Okay, so as I mentioned, we are about to head into a Q&A. So if you have questions, you can go ahead and put it in that box in the bottom. I have a couple of just quick new listings this week and events to highlight before we get there. So as I'm talking, if you want to go ahead and pop those questions in, I'll get to them in just a second. So we have 5 new listings this week. The first one is out of Central Colorado. So this is 13 P&D routes, $1.6 million. It's got pretty high 23% margin, 2 managers, 10 spare trucks, and some assumable truck debt options as well. And so it also has 2 driving managers, so if you needed any help with the operational tasks. The next one is out of Pennsylvania. It is a bread route at $340,000. This one's doing $11,366 in weekly revenue, and it does have a truck available at an additional cost if you want that as well. And it currently has 16 weekly accounts. The next one is a FedEx P&D business, 5 P&D routes out of North Carolina at $525,000. This is high margin business, has a manager, spare truck, mainly newer vehicles as well. And this is a new terminal manager has just come in. That's great. All the drivers are experienced and well-trained. Next one's out of California, 17 P&D routes at $1.95 million. This one has another high margin business, a manager, 5 spare trucks, and the manager is able to handle all of the operational tasks during the day and has some spare trucks as well, like I mentioned. The last one here is another one out of California, 18 P&D routes at $3 million. 25% high margin business with a manager, 12 spare trucks as well. A lot of assumable truck debt if that's the way that you're looking to finance too. And it's a low mileage, high value fleet. So lots of new businesses this week. If you have questions about any of them, reach out to the team. We can give you all the details, all the financials. Last thing here is just some upcoming events. So there is the last event of the year that we are having next week is our new investor summit in our office in Nashville. So that's on December 4th and 5th. There are still 1 or 2 spots left for that. So if you are wanting to come and want to make a quick trip out to Nashville next week, we'll be there. We can meet in person. These new investor summits are really a way for those of you who are trying to decide if you really want to get into the FedEx space or not. And this is a 2-day crash course where we try to teach you as much as we possibly can about both P&D and line haul to help you make that decision if you want to commit and move forward. And if you're going to enter the FedEx space, I want you to do so confidently and with an understanding of the industry. And that's what the summit is designed to do. So that link is in the chat as well if you want to register. Like I said, there's only 1 or 2 spots left, but if you want to come, that is our last event of the year. So next year, we do have all of our happy hours up on our website all across the country. So if you're looking, you can go ahead and check and see if we're coming to your area at any point next year. And those happy hours are completely free, food and drink all free. And it's just a way for you to meet other contractors in your area, other investors in your area, and meet us. We'll be there. So if you are interested in any of those, you can go ahead and register, but at least put it on your calendar if we're coming into your neck of the woods. Last thing I want to talk about quickly is the expo next year is open for registration. So if you've never heard us talk about it, it is our huge big event for contractors that we host every year. It's this year it's in Dallas, Texas, at a really beautiful Gaylord property. Again, it's completely free to go. The event is free, the food is free, the drink is free. All you have to do is get there and book a hotel room. And that is the thing. The hotel rooms are selling out, and we're running out of that block at that discounted rate. So if you want to book your room, I know it's crazy. We're 8-9 months away, but it is already up, and it is already something where if you want to go ahead and make sure you get the best rate, you can go ahead and lock it in if you know you'll be attending next year. Okay, that is all of the questions or all of the events to highlight. Again, if you have questions, I'm about to go through all the Q&A that I've just seen pop through. Make sure any question you have, you put it in that Q&A button at the bottom. If you put it anywhere else, I'll miss it. Okay, let me pop in and look at these questions and start answering them. So this one comes from for us, basically saying, is it true that FedEx is reluctant to approve absentee owners with a new contractor? And is it true that the SBA is more reluctant to approve? So here's what I would say. The first thing I would say is you should never use the term absentee. It should be remote. The thing to be thinking about is if you truly plan to be completely absentee, it is very difficult to want to run one of these businesses successfully. This is never going to be pure mailbox money where you're not doing anything, you're not thinking about anything. Now, that does not mean that you need to be in a truck every day to be successful in one of these businesses. FedEx wants to know that if you're not going to be there, that you'll still be present in the business, even if it's not physically. So you'll be in contact with your drivers, or you'll be in contact with your manager and know what's going on. And if there's a problem, they can call you, or that someone in your business, like an operational manager, is going to be able to answer the questions they have. Now, line haul, it's easier to be more remote, to be there less often, because if you think about it, in a line haul operation, even if you lived close by to the terminal, if those drivers are driving hundreds of miles away from the terminal every day, if something happens when there's 400 miles away from the terminal, it doesn't matter that you live close by. It's still something that has to be solved and has to be solved remotely. P&D, there are definitely terminal managers that are more adamant about you being close by, especially if you've never owned one of these before. And I would encourage you, if at all possible, to be close to your first operation, or to be able to be present to your first operation, so that you can learn as much as you can about the business. That's going to be the best way to build your foundation so that you can grow more quickly afterwards. Now, sometimes, yes, if you are truly trying to say that you're remote, or if you're truly trying to say absentee, I can see the SBA pushing back there. They're more comfortable if they know that you're more bought in and more present with the business, but it will not be a deal breaker if you are remote with the SBA. It just might mean that you need to kind of explain to them how you're going to run the business, even if you won't be there every day. The last caveat I'll give here is every terminal manager's got a little bit of a preference. So there's some who don't care at all if everyone's remote, as long as you're able to answer the call when they call. And then there's some that are really militant about making sure that you are there every day or every week. So one of the things you should do as you're looking at a business is ask the seller what the terminal manager's preference is around remote ownership, and ask him if there's anyone else at the terminal who's operating remotely right now. Because if there is, then it's a good chance that you'll be able to run remotely once you've kind of earned some trust or built some credibility with that terminal manager. Quick one here from Steve. He asked what that tax exemption process that I mentioned earlier was called. It's the rolling stock tax exemption. So if you're looking for it, that's what it's called. Okay. So just a general, I mentioned a couple of times, you can reach out to our team if you have questions. Easiest email is info@routeconsultant.com. I don't know what our phone line is, but I can double check on that. But if you email info@routeconsultant.com, we'll make sure to get a call set up with you at minimum. And it's in the chat too, if you're looking for it. Eugene asked, are there any tax benefits from operating a bread route? So there's always the tax benefits that come from owning a business with depreciating assets that you can use to offset any tax burden you have. You're still going to have vehicles in the same way you would in the FedEx space. You're still going to have those vehicles that you're bringing in, and there's similar types of vehicles. In a lot of ways, you can move vehicles from FedEx or Amazon over to the bread space, and there's no real qualification process. If you're used to what you have to do to get a vehicle approved by FedEx, there's almost none of that for bread. So it's pretty easy to move those vehicles around. Those can be things that you use from a depreciation standpoint to offset any costs there. And that's one of the biggest hedges that you'll see is the depreciation that comes from vehicles versus the amount that you can offset. The other thing too is in all of these that are small businesses, there are a lot of expenses that you can use to bring your NOI down on your tax returns in a way where you should not be paying a lot in taxes. A good accountant should help you out there, whether it's bread or FedEx or Amazon. Quick question from Nathan. So he asked, what is it like to work with us as a buyer? What kind of costs are entailed there? We have a bunch of different ways that we can help. There's one-off things we can do to just evaluate a business for you. There are ways, when I talk about a consulting client, what I'm talking about is we have a program for FedEx and Amazon where we're helping you go through the acquisition process. We call it white glove acquisition strategy. It's got a bunch of different names. But it's designed to help you through the journey of acquiring one of these routes for the first time, both to teach you everything and to evaluate it, to make sure you're paying the right price and that you're prepared on day one. And that applies whether you're buying one of our businesses or any external business. So if you reach out to our team, like I said, there's a few different products, a few different ways it's structured. So we can lay out what all of that looks like depending on what you're looking for. From Ed. So if you find out prior to closing that the fleet value has been overstated by the seller, what can be done if the price has already been agreed to? So one, your contract should always allow for negotiations of those types of things. So a material change in the business is often the clause that we include in our contracts to open up that language there. What I would say though, the first thing I would say is, I mentioned it earlier, but there's a lot of tax implications around the change of the fleet value that you need to pay attention to. It may be in your best interest that fleet value is higher because it gives you a higher depreciation amount that you can use to offset, and offset all your taxes that year and in the future. So before just saying you should go in and negotiate, make sure that that's something you've thought through. The other thing, like I said, the fleet value, it depends on how the business was valued. So for us, all of our listings, we don't value it based just on the fleet value. It's looking at the NOI, which is a function of the fleet because there's some repair and maintenance that goes into it, and then a multiple assigned to it. So the fleet value may not strictly change the price, but there are other brokers that basically assign maybe it's $100,000 plus the value of the fleet is how they value the business. And that would change the fleet. Or that would change the purchase price, and that would be terms for negotiation. So just make sure you understand how everything plays together there, but also think through what the tax implications are for you and if it's even worth it or in your best interest to make that negotiation. Question here on how long do routes typically stay on the market? That is a big variable. So there are routes that you may never see because as soon as they came into us, they immediately went out to a consulting client. Consulting clients actually get access to our listings before they ever go to the public site. So there are some listings that are gone immediately, that you never even see them. Some of them will be around for a little bit longer. And a lot of it's going to come down to if it's priced aggressively or not, because sometimes there are reasons why a seller needs to get out more quickly, whether that's health reasons, or it could be something related to some kind of thing from FedEx where they're required to get out quickly, or they need the capital for something else. There's all kinds of reasons why a seller may need to move quickly, and so they've priced it aggressively, and so it moves a lot more quickly. And then there's some sellers who they don't really need to sell, and so they're comfortable waiting a much longer time because they're comfortable waiting for the right price. The other thing too is the businesses that are fully a full business, not a carve out. They've got a lot of years of financials, so it's really easily financeable through a bank. Typically go much more quickly than the ones that require a heavy cash investment, just because it's a wider buyer pool. So it depends on what you need and what types of things you can, what types of purchasing options you have in terms of if you'll need to be ready. Because if you need to go through a bank, that might mean that some of the deals that move much more quickly and are more competitive are the ones that you'll have to go for, which means that you need to be ready as soon as one of those deals comes up, that you're ready to move forward on that deal because you've done your education, you know what's expected of you in the process. And so different things that go into it, lots of different reasons a deal can move more quickly. Like I said, overnight could be have a buyer, or it could be something where they're around for 3, 4, 5, 6 months if it's a seller who's wanting to wait. All right, question from David. This is a great one. So what he's heard is that the rental truck companies will sometimes make you rent your trucks for peak as early as September. And that is true. So they keep pushing it back farther and farther, but the thing basically that they will do is they know that you need them in November. And they don't want to wait. They don't want to try to, get rid of all of their stock in November. So they basically say you need to lock in this rental in September and start paying for it. And that's also why FedEx starts the pre-peak season kind of payments that they pay you in September. They start giving you that additional supplement on your settlement each week to offset that cost, because they know that you have to start hiring, you have to start adding rental trucks as early as September. So yes, that's what you should plan for, but just know that you do get some help from FedEx when it comes to that. And Pat asked again about reaching out to our team and knowing the list of costs and also knowing the averages. Info at Route Consultant that's in the chat is the best email to reach out to, and we'll get it to you. And Jimmy, I see your question. The first new investor link that we sent was the wrong one. We just updated it, so that new one is there, and that should be the one that you're looking for. Here's a good question. So what are typical or reasonable seller financing terms? So you'll see everything. So there's no requirement as to what those look like if you're not going through a bank. What I will say is, if you're using a bank and using seller financing, sometimes the bank will dictate what those seller financing terms look like, and they'll want it to be similar, or there are certain requirements. They may require that there's no payment to the seller on the seller financing for the first 2 years. So a 2-year standby period. There's things like that that the bank may require. But if you're not using a bank, if you're just doing something like seller financing and cash, or seller financing and assumable truck debt, that's completely up to negotiation. So I would say the average seller financing is something like a 5-year term, but there may be a balloon payment after 3 years, or maybe it's a 10-year term with a balloon payment after 3 years. And so it's structured as if it's a longer loan, but after a few years, there's a full payment. Reason you do it that way, if it's structured as a longer term, then it makes the payments easier each month. And then a balloon payment after about 3 years, one, that gets you out of the loan and the interest rate. But also after a few years, if you wanted to, you could refinance the whole thing into your own loan through something like the SBA or conventional. Once you've owned the business for a few years, it's a lot easier to do that. The other thing, I've seen seller financing that are 12 months with no interest. I've seen seller financing that's 10-year with similar interest rates to what a bank offers. So it's really up to what you can work out with the seller. And there's all kinds of reasons why they would want a longer term too. Of course, it's beneficial to you as a buyer, so that's helpful for them. They want your life to be easier so that you can keep paying them. But the other thing is, for a seller, if they spread the payments out over a longer period of time, that also spreads out their capital gains tax. So it's good for them as well. So there's reasons for both sides to be doing seller financing. All right, let me see. So question from Jimmy. So this is an update on something that's been happening actually since the beginning or the end of last year till now, and it's going to keep happening in the future. So what do I think will happen to contractors when FedEx Ground and Express merge in 2024? Is there a future for FedEx contractors? How is it going to work? So first off, the target is 2024. I will say that the caveat is that FedEx often makes these targets and then extends it. So June 2024 was the target. I would expect it to take probably into the beginning of 2025 at least, just with the way FedEx operates. And there's going to be some markets that take even longer. A good example of this is something called overlap that happened. It's been 5 years now, maybe, since they announced it, where basically there used to be two divisions of the ground network, where one contractor delivered business stops and one delivered all the residential stops. And FedEx realized that was really inefficient, so they combined the two. But there are still some territories that have not overlapped. The vast majority of the country has been overlapped for 4 or 5 years, like I said, and there are still some territories that haven't overlapped yet. So that's just an example of how long some of these are going to take. But for the most part, this merge is probably going to be finalizing, or at least happening, beginning in 2024 for most territories. So the thing to know is that in the vast majority of areas, FedEx is still looking for ground to take on the express volume as opposed to the opposite. In a lot of, basically in Canada and then in states like Alaska and Hawaii that were very different models from what the ground network looks like in the lower 48, express did take over. But for the most part, we've seen it happen, and we continue to expect it to happen, where ground will take the express volume. And so that is happening. There are contractors across the country who've been running it, who are running it right now during peak season and experiencing the joys of the FedEx. The big thing on the FedEx Express side is that there are time-sensitive deliveries that you have to make at certain points in the day. And one of the things that'll dictate how hard that is for you logistically is really how close you live to an airport, or how close your terminal is to an airport. Because FedEx Express packages are often traveling via planes. And so when they arrive, if you live really close to the airport, you might have time-sensitive deliveries that are due earlier in the day, like 10 a.m. versus if you're farther away, it may not be till 4 p.m. or later. So we've always had pickups in the FedEx network. There's always been, the way pickups work is you have a window that you have to pick up the package within a certain amount of time. So there's always been something like the time-sensitive deliveries, but this is just an extra wrinkle as a part of the new ground network that we'll be experiencing and bringing you updates on for at least the next 12 months, we would expect. Mike asked, when will we be posting our new investor summits for 2024? That is coming very soon, so stay tuned. Before the end of the year, we'll make sure that we've kind of updated you on what that's going to look like next year. So a question from an anonymous attendee. So when you're buying existing routes, does FedEx require buyers to have excellent credit scores or business experience? So credit scores, not necessarily. That's going to matter more if you're using a bank as a lender. They will look at your credit. They are going to look at your personal financial history to understand what you're bringing to the table, how risky you are as a investor. FedEx cares more about your business experience, and it doesn't necessarily mean that you need to have experience in FedEx or in the logistics industry. Obviously, that will not hurt you. It is nice to have any of those experiences, but really what you're trying to express to FedEx is that you know what you're walking into, you've done your homework, and you're aware of the challenges, and here's what you're bringing to the table. You don't know everything. You know there's things that you're going to have to learn while you're on the job, but here's what you're bringing. So you'll want to highlight things like any kind of management of people you've done of the past, any kind of maintenance of vehicles or anything like that is helpful. You're basically trying to emphasize the things you've done in a way that is helpful to FedEx, because at the end of the day, that terminal manager needs to know that they can count on you to run the business. They're making a decision that affects their job by bringing you in because they want somebody who can run safely and effectively in their terminal. So all kinds of things to think about. We can help you prepare for those interviews. Lots of things we can do there to help get you ready for that. But that is just some high level things to be thinking about when you're thinking about those. All right. Okay, so here's one from Ed. So in the route consultant listings, is the fleet value included in the sales price, or is it a separate cost? So We list the fleet value on the prospectus. We want you to know what the fleet is valued at, but that's not how we do our valuations. The way we do it is we do a net operating income, and whatever that is, we'll assign a multiple to that net operating income. So if the net operating income is $50,000 and it's a 4 multiple, then the price would be $200,000. The fleet value is listed, but we don't value the business as, $50,000 plus $200,000 fleet is $250,000. That's not how we do the valuations. We'll look at the fleet to get a sense of what the repair and maintenance expected cost will be, because that's going to affect the NOI. Things like fuel will come from what the fleet looks like. All of that's going to affect the NOI. So it's not strictly looking at, a value of a contract plus the value of the fleet, but it is something that goes into the NOI. So we don't, while we show the fleet value and the fleet goes into the valuation, it's not strictly that dollar amount that we're showing there that's built into the price. It's based on the NOI and a multiple of that. David, I see your comment. Much better background. If you've seen any of the webinars in the past, my old office was just a white wall, and he used to joke it looked like I was in the basement of Route Consultant. So now I've got a pretty view to make it a little livelier. Question here from Daryl asking about obtaining the Schedule K and tax returns when you're looking at a business. So he asked about it. So quick thing. So first, Schedule K is part of it's basically the addendum to your contract that you sign at the end of the year as a FedEx P&D contractor to kind of explain how the additional peak payments are going to look for the year. So the way it works in P&D is that they will set a threshold, and for every package you do above that threshold, you get paid an additional amount per stop. You also, if you sign the Schedule K, you also get those pre-peak payments that I was talking about leading up to peak season. What it also means, though, is that you are agreeing to do all of the volume that comes your way. And so FedEx, if somebody nearby you is not able to deliver volume, then that might be brought onto you. And that's part of Schedule K, is that you're also agreeing to basically help FedEx out with any volume that they need you to do in your area. So as far as obtaining the Schedule K from the past few years, it's just going to be a matter of asking the seller or going into MyGroundBiz, which the seller can do, assuming they've owned the business for the last 3 years. If let's say the current owner has owned it for 2 years and the previous owner owned it the 3rd year, it'll be difficult to get that previous owner's Schedule K, but you can get it from whoever owns it right now. Same for the tax returns. They should have all of their tax returns. The challenge will come from if they're selling you a piece of a business. So let's say they have P&D and line haul and they're just selling the line haul. They may have the tax returns, but it may apply to the entire corporation, not just line haul. So there's some wrinkles there that you may run into when you're trying to get tax returns to make sure that they are what a bank is looking for. And oftentimes in a situation like that, the accountant for the seller will have to carve out those financials and provide CPA carved out financials for the bank. Sometimes we can do evaluations that satisfy what a bank is looking for and provide that, but not always. Sometimes banks will require the seller's CPA to validate a set of financials. Question from Anonymous, can they come to us and help do an evaluation on a business? Yes, we do those all the time. We can do one-off evaluations on a business, and it's not just us saying what the price is that we would recommend, but it's also, we call it an operational improvement plan. So we actually go through, hey, here's what we would tell you to pay for what it is right now. But here's also, let's lay out what some of the challenges are in the business and talk through ways that you can improve it in the future. So you can know the right price to pay now, but also know what your potential cash flow could be in the future. That shouldn't affect how much you pay for it, but that's just good knowledge to have in terms of understanding what the roadmap will be for you in the next few years and how you can improve the margins. So yes, we do those all the time. You can just reach out to our team. Same email I gave before and ask about a business evaluation. Question from Brett. Fleet value has to help with financing, assuming you're using traditional lenders. So what I would say is banks are happier the higher the percentage of the deal that is, if typically we see the fleet be about 30% of the purchase price in the FedEx space. So the higher that is as a percentage of the purchase price, the happier the bank is, the lower the more hesitant they are. And they typically will be asking for the fleet as collateral as well. So that's why the higher the percentage of the purchase price, the easier it is to finance. So that is a good point. That does affect the way the bank thinks about it. And so it's another one of those considerations when you're thinking about fleet value. This is a great question from Neil. So do you have a sense for how common it is for a prospective contractor to go through buildagroundbiz.com and be granted a contract? So first, really important to understand what buildagroundbiz.com is. So on that website, it's a FedEx hosted website. It's where they post all of their free and open territories. So typically what that means is that it is either some kind of new territory that they are adding in an area. Maybe they've split up a couple of people and it's a new territory, or it's someone who previously failed and it's an open territory. And so what you'll get when you apply for Build a Ground Biz is a territory with very little history, very little information from FedEx, no trucks and no drivers. And so really it's free, but you have to bring in all your vehicles, you have to hire all the people, and you have to figure out how to run that business successfully without any knowledge of what it really looked like. So when you apply for it, oftentimes those are going to go either to contractors at that terminal or to someone. Sometimes what you'll see is sometimes those are businesses that a current contractor has lost and FedEx is required to post it, but they always intended to give it back to that current contractor if they wanted it. So sometimes those just go straight back to the person who has it already. So what I would tell you is that it's not very often that people get it through there. You can. It's definitely something where you can apply for, you can interview, and you can win those contracts. But you have to be really prepared in that interview. And at the same time, it's just not something I would strongly recommend because it is such a difficult on-ramp journey to start with your first business in the FedEx space coming through those because you don't know how to operate them yet. And the real challenge is if you come in on that first one and you do very poorly, that's all FedEx is going to remember you by. So the only mark on your record is a black mark, and it makes it really hard to expand from there. I'm much happier if that is your second or third operation that you add and bring onto your existing business once you've taken over a successful operating one and understand how it works. Ed asked, what's the status of Sunday deliveries? So still, for the most part, most people are not running Sunday deliveries. There are still some who are running it. We haven't heard an update if there's going to be more Sunday deliveries eliminated in the new year. Hopefully they do. Sundays for most territories are not great, not a profitable day. You're really losing money on Sundays. There are some territories that are dense enough, they get enough deliveries to make it worth it. And right now during peak season, there are going to be some more territories that run on Sundays just because there's so much additional volume that you can justify running on Sunday and are happy to do so. But for the most part, most of the contractors are not running Sundays, but there are still, a good chunk of territories that are, and we haven't heard an update yet on if those will change in the new year. How do I reach out for help regarding P&Ls on a business? So I think this falls back in to the same question I said, same thing I've said before, a couple of things. One, if you reach out, we can just show you what the average expenses are at each line item for any of these types of businesses. And the other thing too, is if you need our help on actually doing an evaluation, we're happy to do that too if you reach out to our team. So either one of those two ways. Okay, last question here from Dave. So he's looking at a listing with 6 line haul routes, asking what are typical line haul driver wages. So for the most part in line haul, you're going to be paying a per mile rate. That is going to vary across the country, and it's going to vary on if you're looking at solos or team runs. And team runs are the ones where you have 2 drivers in the vehicle. For the most part, if you're looking at, let's say it's 6 line haul routes that are solos, anywhere from 50, 60, 70 cents a mile. It's really going to vary based on the part of the country you're in and also the experience level of the drivers. But it is common to see line haul drivers making over $100,000 a year. And it can be higher or lower depending on part of the country and their experience level. So I would say it's always going to be a case-by-case basis, looking at the territory and the drivers that are a part of it. Okay, so it was a ton of questions, but we are here at the end. And so if no one else has any more questions, thank you so much for joining us here on another one of these webinars. It's always a pleasure to be here. Like I said, for me, it's great to get to answer all of your questions, but it's a lot better for me when I actually get to see you in person. So I would strongly encourage any of you to come out to our events, either the summit next week or any of our events next year, the happy hour, the expo. We'd love to get to meet you in person, get to talk to you and answer any questions you have there, and also introduce you to other contractors, others looking to get into the space that live in your area so that you can network. Besides that, thanks everyone for joining this time, and we will see you all on another webinar next week. Thanks.